In today's energy markets, let's take a look at WTI crude futures initially, as they are realizing some volatility here today. We did see them put in two-year highs initially this morning, but then some selling pressure, pushing them down to 64.65 currently, now a high of 67.98 intraday. And I think when you look at some of the factors playing into why we're seeing this price action today, number one, the attack on the Saudi oil installation over the weekend caused some concerns. Any destabilization in the Middle East certainly is viewed as a supply disruptor, and there was some concerns coming into today's session. But I think most of those concerns were washed out of the market, as it does not appear that it's going to have really any impact at this point on the supply situation over there. Couple that with probably the bigger driver, the dollar continuing to rally today, pushing up to the 92.4 level, the highest level in quite some time. And I think that that's slowly having an impact here, as at least for the short term, and why we're seeing maybe some hesitation here today in the WTI crude futures. Now, I want to point out that when you look at some of the trends, we are seeing a nat gas futures down for a fourth day today, so they're realizing some further selling pressure and pushing them down to basically a little over a month lows. You have to go back to the end of January to see natural gas trading here around the 2.66 level. And I also want to point out, when you look at the CVOL measure of implied volatility on the options on both natural gas and on WTI, we are seeing that peak up here a little bit the last couple of days. It'll be interesting to see how it plays out today with the selling pressure. I'd expect that we're going to continue to see this slight shift in the trend, shifting back towards an increased demand for those options.